But Sacchitanand Uttekar from Tradebulls joins in now to discuss what he's tracking this afternoon on the technicals. Sacchitanand, welcome to the show. If you could just start by telling us what your Nifty strategy would be considering the consolidation that we're seeing.
Good afternoon, Ekta. Good afternoon, Mangalam. I think it's been a good start for the week. The Nifty has defended its 50-day exponential moving average support at 24,950 very well. We saw some slippages yesterday, but the recovery has been very significant on the daily scale. We have a strong bullish reversal formation. The confirmation of the same would be set once we see the Nifty, scaling towards 25,180, 250 kind of a level. So as of now, I think the range is well defined. It is oscillating between two key moving averages. One is the 50 DEMA, which is at 24,950. And on the higher side, it needs to surpass that 20-day exponential moving average, which is placed at 25,180. But if you look at the placement of its indicators, especially on the relative strength side, there's a possibility that we may see the Nifty scaling towards 25,250 during this particular week. So hence, we are of the opinion that one should maintain a long bias in the market, though the range is looking like an oscillating range, but within this particular range, the opportunity is purely on the buy side. We are expecting that 25,000 support should hold on at least for the day. Hence, we are recommending building fresh long positions, keeping a stop loss at 25,010 on a closing basis. Eventually, we may see this Nifty scaling towards 25,250, and we may see it surging towards 25,300 for this particular expiry. When we look at Nifty Bank, the range is a bit broader. 56,400 has been a very steady support. But on the higher side, it needs a confident closing above 57,400 mark. If you look at the overall sequence for the last 3 weeks, it looks like a bullish flag formation awaiting a breakout confirmation. So even here, I think one can keep a stop loss at 56,720 on closing basis and look for building long positions. When we look at stocks, I think we have already seen a very confident breakout from ICICI Bank. After 9 weeks of consolidation, this particular breakout has pushed the stock above that 1460 hurdle. So even here, I think there is a good potential that we may see this particular rally getting extended towards 1540. It has been a significant contributor in the last few trading sessions, and that's why we believe that any declines in this particular counter would again give a good opportunity to create fresh long positions. One can keep a stop loss at 1462 on the lower side on a closing basis. From a trading perspective, we may see a swing towards 1510, but eventually we see this rally getting extended towards 1540. So there will be a buy call on ICICI Bank. And the second stock which has hit our radar is Tata Chemicals. Now, if you look at the overall performance, even here, the stock was struggling to surpass its 200-day exponential moving average resistance, which is placed somewhere close to around 950 kind of a zone. Even if you look at its weekly price action, it had been trending lower below its 50-week exponential moving average, which is somewhere close to around 955. So today we have seen a significant price development. We may see this particular rally getting extended towards 1,000 levels. Hence, we are recommending building fresh long positions in a stock like Tata Chemical, keeping a stop loss at 945 on closing basis.
Okay, thank you so much for that. Thank you so much for giving us those views on individual stocks as well as in terms of the market. Just a stock that I want to mark one.